Hi, in this video, I'm going to talk about non-periodic distribution for an annuity, especially like a lump sum withdrawal. So specifically, I'm going to talk about the tax implication with it. So the situation applied is like when you own an annuity. So basically, annuity, usually the purpose is you purchase an annuity, then the annuity will pay you periodic income for your lifetime or for a period of time, right? However, if some policy owners they have a money situation, shortage situation, they may need to take a withdrawal of the annuity before annuitization or annual payment, right? They want to take a larger lump sum. So in that situation, then the tax will be taxed differently from the periodic payment. So let's see. So basically, there's a situation, another law regarding this changed. So before contract issued before August 14, 1982, then and your distribution prior to the annuity start date. So okay, you policy was issued before 1982, and the annuitization of the periodic payment haven't started yet, right? So in that situation, so the non-periodic payment is treated on the FIFO basis. Let's see an example. What does FIFO? So as an example, assume a taxpayer purchased a deferred annuity in 1981 for $300,000, and the cash surrender value now is $500,000. You can see there was a $200,000 earning on it, right? So the contract has not reached its starting date, so you haven't get the periodic payment yet. So non-periodic distribution up to $300 would be taxed free, as a taxpayer is withdrawing their investment funds. So what do they say? So you purchased this policy was before 1982. So now have a face value is $500. Initially, you put a $300 in it, so you have a $200 earning. So now if you decide to take a $300,000 lump sum, then the $300,000 is coming out is tax free because it's considered your principal coming out first. So that's why it's called FIFO. So this is in this. So only you, let's say you make more than $300 withdraw, $300,000 withdraw. So then you can be taxed anything excess over $300,000, right? So that's something. So the previous statement, this statement is true even if the pre-August 1982 annuity contract was swapped with a 1035 exchange. However, IRS may require detailed document. So even you own that policy, you exchange it to another annuity policy. So this is true too. So you get the FIFO treatment as long as the annuitization haven't started yet. Okay, so what if the annuity start? You already taking monthly periodic payment or already annuitized. So in this situation, it's not FIFO, it's a LIFO. LIFO is the earning coming out first. We're gonna talk a detail in following. the contract issued after August 14, 1982. So you can see any contract issued after 1982, then happens, it doesn't matter if the distribution is taken prior or after annuity start date. So you can see it doesn't matter if your annuitization started yet or not. So everything is treated, the distribution is treated as LIFO, always LIFO. So the LIFO meaning is the withdrawal consists of fully taxable interest first. Then the second tax-free principal to the extent the interest payment are fully exhausted. So everything coming out first is earning first. Okay, the previous example said if you take a distribution of the $300,000, that would be fully taxable $200,000 earning first, then the $100,000 principal out second, right? So basically your $200,000 will be taxed. So you have to keep in mind when you withdraw, you have to know, what's your policy, how much is earning. You will know when you take the withdrawal, you won't be surprised you get hit bigger tax bill. So that's very, very important to know. So for majority of the policy they are issued is after 1982. So most they are LIFO. So your earning coming out first. So this rule applies to extend the cash surrender value of the contract is its investment, the contract. Well, basically, if your cash value is greater than you initial bought it, right? So then you will have an earning, so that when you take out a lump sum withdrawal, you will get hit the taxable earnings first. So that's just something is always keep in mind. So if you decide to take a lump sum on your annuity policy,